Thank you so much for joining us this evening. We got a response to the last seminar. That's why we followed up with this one. And we hope that you can make most of this session. We have had 177 registrations for this one. And that highlights the relevance and complexity of this topic, isn't it? Please add your questions to the chat and we will address them during the Q&A sessions at the end. To give you overview of this program, in the first 20 minutes, I'll be talking about 5 tax mistakes to avoid when selling Indian properties. Then we have 10 minutes for Q&A. At the outset, we have a disclaimer. This presentation should not be considered as a tax advice. Please consult your tax agents, lawyers before proceeding further. We are sharing this information for everybody's benefit. Before I begin, I would like to give you a bit of a context by telling you about how NOBILIS NRI taxation was formed back in 2016. It started with my own experience of trying to bring funds into Australia. In fight of being chartered accountant and CPA Australia with an international taxation background, I struggled to navigate through a maze of different tax rules here and in India to bring in funds. Needless to say, it was a stressful process, too complex, no set process, no standard format, and Indian CAs don't understand Australian tax rules, and Aussie accountants don't get Indian tax rules. I realized I had the skills and expertise to help others in a similar position, and 6 years later, here we are. I could not have done all this without the tireless efforts of my amazing team in Bangalore and Sydney. Thank you for all your efforts. And I also want to thank my associates in mortgage and real estate space. Okay, to start off, for the following slides, I'll be describing in detail the 5 tax mistakes to avoid while selling Indian properties and repatriating the funds to Australia. As you may see, the ultimate objective is to bring funds from India to Australian bank after selling Indian property. How do we do it? We have a few hurdles to cross before reaching that happy moment of having funds in our Australian bank account. The pandemic has also made travel to India extremely difficult, adding to the complexity. Should you disclose Indian property sale in Australian tax return? This is a difficult question to answer. This is a common mistake that people make, get into trouble with the ATO. This is a data matching program between PAN number and TFN, and also an automatic exchange of information system between India and Australia through G20 Summit Agreement. As an Australian citizen or a permanent resident, you should disclose an Indian sale of property in Australian tax return. Under the Australian tax rules, you are required to disclose your global income in Australian ITR. It's also wrong to assume that if we don't bring the funds to Australia, then we don't have to disclose it in the Australian ITR. We can assist you with our customized tax minimization strategy, by which 50% of our clients end up not paying any taxes in Australia for the property sale. The property sale in India needs to be disclosed correctly. The financial year in India and Australia. where you can see there's a financial year in India is 1st of April to 31st of March, and financial year in Australia is July to June. There's an overlapping months, April, May, and June. This is the worst time to sell the property from a tax point of view. I'll just give you a small example. If you sell your property in the month of March, you can claim a refund within 4 months, right? If you sell your property in the month of April, you got to wait 14 to 16 months to get that refund. You know, if you want your funds to reach Australian bank account quicker, it is better to sell during November, December, January, maybe. You know, I found it, these 3 months are really suitable for most of us because it's a Christmas break and we can do whatever we want. Not doing an Australian tax planning before the sale. Planning the Australian tax return beforehand will help you to minimize the overall tax liability, both in India and Australia put together. Just to give an example, reinvesting your funds, let's say 50 lakhs in bonds in India, does not attract capital gain tax in India. And this option may be suggested to you by a chartered accountant in India who may not be fully aware of the Australian tax rules. This tax exemption is not recognized in Australia. You will have to declare it in the Australian ITR. In our tax advisory report, we consider your tax liability and cash flow requirement to suggest 4 different options for you to choose from. To minimize the overall tax, we also consider visa conditions and rules, date of permanent residency, date of purchase to apply tax minimization strategy. Lower withholding of taxes. There's a TDS of 20% on sale price. Just to give an example, when you sell your property for 1 crore rupees, there is a withholding tax of 20% on 1 crore. Whether you make capital gain or loss, irrespective of that, 20% is applicable on the sale price. So essentially, you would get 80 lakhs rupees in your NRO account. How do we overcome this? The only way we can solve this problem is to apply for lower withholding of taxes. Lower withholding of taxes improves your chance of getting funds faster. If you have already given a deposit or required funds immediately, this is very helpful. And it is usually takes 6 to 8 weeks to do this. And it is a good idea to get in touch with us well in advance for your planned sale. NR account, PAN, KYC to transfer funds to Australia. These are basic documentations needed, and funds get stuck in India because of something simple like not having an NRO account. What do we need to repatriate the funds? Update your address, make sure that everything is in order with the PAN card is concerned. NRO bank account is mandatory. We can't continue to do with the savings bank account. The KYC is a know your customer rules. Make sure bank is informed about your KYC rules so that your bank account is fully compliant. When a sale proceeds gets into NRO bank account, that is where funds get stuck. These are simple things which we can keep it ready for a property sale. Then the last important point which I'm coming to is the previous ITRs. Just imagine, you have earned any interest on this property. Make sure, even though it is less than the threshold limit, make sure that rental incomes are properly disclosed in your Australian tax return, and also tick a box where it asks for asset worth more than $50,000. So these are simple compliances required when you want to dispose of your property in India. How much can we transfer? Essentially, you can transfer 1 million USD, that means 1.3 million Australian dollar without RBA permission. And of course, you need to have 15 CA, 15 CB issued by a chartered accountant. And there are simple steps to follow. Reach out to your chartered accountant or us, we will be able to provide a 15 CA certificate so that the funds can be repatriated to Australia. At last, the happy moment is here. Your funds have landed in your Australian bank account. Now you're free to spend it any way you wish. This slide shows a range of services which we offer, which includes a 15 minutes consultations with me, absolutely free of cost. We will send you all the link to the calendar for a 15 minutes free consultation. Feel free to book a call with us. We have a network within our client base who are looking to buy Indian properties. If you are looking for a buyer for your Indian properties, we can certainly assist you with that. Alternatively, if you have already found a buyer, we can help you with the sale and repatriation process. Best to reach out to us at least 6 weeks before the sale. All our partners have good understanding of the requirements of Australian PR and citizens selling properties in India, and you will be in safe hands. Our vision is to offer one-stop solution to sell your Indian properties and bring funds here, build your real estate investment portfolio in Australia. We offer peace of mind with a lot of handholding from our Indian team and value for service. This will reduce uncertainties in this process. Your funds are definitely going to come to your Australian bank account. I'll take your questions now. You can add them to the chat box if you want. Thank you very much for attending my session.